Ira Epstein with your Tuesday morning flash video for this March 17th, 2020. Just getting on to 9:15 a.m. daylight savings time. Wow. Big ups, big downs continuing, limit moves one way or the other, circuit breakers hit, and then you're moving the other way. Now today the chase is on for US dollars. Take a look at what's going on. This is already 20 off the high, but it's the other currencies worrying as the world keeps shifting around, worrying what's the next thing that's going to happen bad. Expect that the Fed makes some more moves. Expect that the government with the Fed, in other words, the U.S. Treasury, is going to let them do certain controls to keep the commercial credit market working. Other parts from the fiscal spending from the government probably coming to bear, and more moves by the Fed in order to ease the crisis for the U.S. dollars. And that's what's going on. It's almost like you go into the grocery stores, you see all the toilet paper's gone. It's the analogy I have. Now everybody's buying the dollars on the same analogy. They won't be able to get them. I don't believe that'll be the case. Energy markets still big problems here. But look at where you're at on the differential between Brent and WTI. 50-cent difference on the pricing. This is part of the goal that the Saudis have to say, you know, we're not going to have that difference in the price. So now all that shipping from the U.S., well, that's a lot of cost. We're right in your backyard, certain people, obviously. We can make it a lot less money. Okay, we haven't heard anything from Iran and all this, which is interesting too. In the grain market, it's a little bit of everywhere, trying to make heads or tails out of what's going on, difficult. But I will tell you, Goldman Sachs came out with a report, very bearish on the corn market. They're looking at ethanol, feed usage, and so on, and they've decided to label that market in trouble. We're seeing the cocoa market, the coffee market, all in trouble. Now, one of my own indicators on coffee that I've been telling traders about is this. When I saw that people were going back to work in China, and they are going back to work, I'll show you that in a minute, coffee prices were running to the upside after a hard break. Now they're breaking because Europe and the US is closing restaurants, pubs. People aren't on the street. I took a bus today. Normally there'd be 70 people, 80 people on the bus. There were 6 of us. So that gives you an idea what's going on in city traffic. And all you see are restaurants closed, and then lines drawn across if it's a McDonald's where you can't sit down in there any longer. All you can do is take the food to go. It's having a major impact, but I'm bringing that up because that will impact the coffee too. That'll be my indicator when I see it doing better, that maybe things are changing in that nature. In terms of the news today, 2 days ago, and I didn't realize it, Raj, thank you for writing me. 2 days ago, the Fed canceled the regularly scheduled FOMC meeting that was to take place starting today and tomorrow. I didn't pick up on that. That's when they took the emergency moves on Sunday. I don't know why I missed it, I just did. The NAHB Housing Market Index came in at 72. The prior was 74. The prior month, 74. That's in line with expectations, and we do expect pressure to be there. The Federal Reserve's U.S. industrial production capacity utilization. Well, the recap here is February up 0.6. They expected up 0.4. Utilization about where they thought. You did better in the January revisions, and you're fine all the way through there. So no pain, but we know it's slowing down. Come on, that's pretty evident. The U.S. advanced retail sales, well, down 0.5 from February. Ex-autos down 0.4. So we're starting to see these numbers come down a bit, and they're going to be only worse now that we're in March. Why? How many stores on avenues are closing? They can't get staff in there. People don't want big crowds in their store, so we're dealing with that right now. Business inventories, no big shake in the numbers at all, about where they expected them. Red Book sales, well, when you took a look at the first 2 weeks of March, they were up 1.1%. That's good. They were up 7.2% for the first 2 weeks of this year versus last year. So I'm waiting to see when this gets thrown backwards, but it hasn't so far. And I'm not seeing it very big in the IC, and there should have been an I here, an ICSC retail. Germany, ZEW current account index, whoa, taking a smash. 43 down to 43.1 versus the 15.7 decline we had prior, and their conditions index just going into the toilet, 49.5. Now here's what I was saying about China, and if you read this for a moment, they are saying that they are getting their industries back to normal. And they're proving it with the power consumption, which I was pointing out to you a while back. And yes, Wabi is the exception, but it too is getting normal. They are far down the other side of the curve, which means while the demand-supply functions of the world are all mixed up right now, and I think you know that, supply's going to be coming back. They're going to get to the point where they're 80 to 90% now in their pharmaceuticals. They're getting other parts of operations coming. It could be motors, parts. That's starting to happen. So once we, that's Europe and the United States and other parts of Asia, are through with ours or peak at the virus point, supplies will be waiting, and that's the good news. So I am not one that thinks this is a big duration item. I am one, and I'm by myself so far, that think if you look at the calendar as to how China went and you apply it to us, I still think we'll have peaked somewhere April, May, late April, early May in the virus. I believe that people closing restaurants, stopping contact will do more good than bad. They're already doing it in Europe. And yeah, that might mean summer that you're back to normal, but so what? You got to get to that point. And for that reason, I don't think this is quite a panic like 2008 that you saw in many of these markets. But that's what I talk about in the morning with the traders. You know, you've got to be second guessing yourself, right? You've got to be questioning the confidence in your trade analysis. When you go to the bathroom in the market's another way about that. So what I try to do is point out the different years of my experience and what I've seen on these charts early in the morning. 40 charts on the futures markets. I cover about 25 charts on spiders and ETFs, 4 in the afternoon. So I'm giving you all kinds of research. And yeah, I'm going to talk on points of entry and exit, profit objectives. Should you trade? Should you hold your hands back? It's too volatile? No. You start making a move. I started putting out trade recommendations last night. I didn't last week. So I'm feeling in these markets that I'm able now take my toe and put it back in the water. Now, these are the markets